All right, folks, welcome back. This is Smart Money Concept, Algorithmic Market on Close Macro. It's a mouthful, I know. So I'm about to demonstrate something that your other mentors out there are not going to be able to duplicate. They might talk about the last hour trading and macros existing, but they're not going to be able to show you what this is. All right, so I'm establishing a short inside of an inversion fair value gap, and that's this separation here, including the volume imbalance. Both sides of the range. And I'll change this color here to my standard orange hue. And I'm going to add more to it here as we're inside the upper end of it. And now I'm going to place my stop loss there. Notice I do not move that stop higher. And I'm going to target that little short-term low there with a fair value gap. Volume imbalance included. That's, I'll shade that blue because it's a discount array. Okay, and I'm going to add some more here because we're at the consequent encroachment of that inversion fair value gap. And we'll add more there. So now we have an even 10 lots. And I want you to see the full range here. So we have a swing low that formed prior to 3:10 p.m. So there's sell side resting below that. And below that swing low, we have that blue shaded buy side imbalance, sell side inefficiency. This is the daily high. On regular trading hours, set, meaning that it's not going to make a higher high. Ask your other mentors if they can do what I'm about to show you here. Okay. I'm going to give you a master class in stop loss management and stop loss placement. All right, so we're going to put our first limit order in there. That might change. I might increase that. For now, that's going to be significant enough. So out of the 10 contracts I have on at the present time, sell side liquidity. I know you guys that want to send comments to me. You can make that automatic. Right, elongate that inversion fair value gap. And make sure you guys know what I'm looking at here. Bearish fair value gap. Okay. So notice the stop loss. And notice also I'm adding right inside the high of that inversion fair value gap. I'll bring this down so I can keep this. I want to try to keep the bottom of the range showing as much as I can. Let me scrunch this up a little bit. Bring it down here. That should be good. Yeah. All right. So notice I'm shorting inside of that former bullish buy side imbalance, sell side efficiency fair value gap. And the market looks like it wants to rally higher. And I'm watching other live streamers and they're all chattering about how they want to go higher. But all inside this price action in here, that's already delivered. And my stop loss is absolutely 100% safe. Now, they can throw a manipulation in there and wipe me out, but that's not going to follow the script. So the script is the daily high is already set. So any type of wick bodies shall not pass. Okay, so I want you to pay attention to this. Okay, this is just a demonstration. I know it's going to make you mad because I'm not going to teach this to you, but this is just separating the men from the boys and then me. So notice that there's little wicks that are forming above the inversion fair value gap. That is permissible. but it will not trade to where my stop loss is. I'm not fearful that it's going to hit it. I'm not worried about it making a higher high. And live streamers and your friendly neighborhood prop firms are all looking for longs right now. I don't say that to be mean spirited. I don't mean to be trolling, but I want you to know, go back and watch their live streams and you'll see that they're absolutely bullish right now. So I'm watching price. I'm watching how the bodies are behaving in here. All the bodies should be respecting that inversion fair value gap. And I just noticed that that's wonky. So I noticed the other day my annotations on my trendline segments on TradingView, I would toggle to bottom and it would show on the top and vice versa. So I'm not sure if that was a glitch or whatnot, but so far I like what we're seeing here. That's a nice signature in price delivery where it's showing the bodies respecting that shaded area. So this is one of my reversal patterns, and it's based on an algorithmic script that price runs on. And I know some of you that are watching this video that are not in my Telegram channel or not in my private mentorship and watch me do this day by day by day for years. It's going to seem a little too good to be true, but there's about 44,000 of you that have watched me today, and yesterday that should have been about 36,000, I think, of you in the Telegram channel. So I'm envisioning how the market's going to drop down into that first minor sell side liquidity pool, and I'm going to observe how it does it. Does it start to go down? Does it need to come back and trade back into the inversion fair value gap? Does it need to throw a couple more wicks in above it? That's what my concern is right here, right now. It is not, I'm going to get stopped out. Right now, your heart palpitations would be increasing. I'm not thinking that. I'm watching all this here, and I want to see it reject and go lower. See that one body outside of it right here? Watch how close it gets to the stop, but it does not get to it. Bull flag traders, they're getting real excited right now. They like that. You see that? You see how I got real close to that stop loss? Nothing has changed. You shall not pass. Now, when the boys talk about macros, because they heard me talk about them, they're not going to be able to understand how this is done. And I've never promised I was going to teach that to you. But this is what separates me from everybody else. And for the folks that say there is no algorithm, just watch this one. So far, we've seen that candle create the turn, and it's trading down into a buy side imbalance, sell side inefficiency, but it might need to come back up in there and touch the low of that. I just realized that that says negative fair value gap. It should be, I'm going to practice a little bit of leniency on myself. I'm not going to change it. I'll just leave it at negative fair value gap, but it's an inversion fair value gap because it started as a buy side imbalance, sell side inefficiency initially, and it should keep price at bay. Now, you might be looking at those bodies that are outside of that and it might be scaring you. And it probably would scare you if you were in this trade. If we were looking at this on a 2-minute chart or a 3-minute chart in this area here, watch the bodies, okay? Typical facetious comments in here. Told you so. And now, the worst case scenario, it can come back up and trade to the rejection block, which is the highest up close candle prior to this rotation lower. So in my mind, the stop loss is absolutely still placed correctly because the algorithmic script is going to indicate that it cannot and should not go any higher than that. Meaning that what you saw, the highest delivery in that little wick, that's as far as it's going to go. Even this return in here does not worry me. It doesn't bother me. I want to start putting my limit orders in. I think I'm going to change that buy limit with 3 contracts. I'm going to probably change that to something a little bit more than that and take something a little bit shorter term as a target just to illustrate how you might do a market on close macro trade. So if you were in my Telegram, you watched me get real close to the low of the day during my commentary real time this morning based on the daily inversion fair value gap that we were starting our week off with. And if you don't know what that is, obviously, if you check the Telegram channel out, it's completely free, folks. I'm not charging you for it. You'll see what I'm talking about. So let's change that there. Take 3 inside that fair value gap, and I'll annotate in a minute. And then I want 5 contracts under that minor sell side liquidity pool. So I'll highlight what I'm limiting out on. This is a very, very easy, low-hanging fruit objective. So in the worst case scenario, say that Michael's wrong and they want to run out that high and go outside of script. And they certainly can do that, but I don't believe they're going to do that because they have stretched this out all day to the upside. So now they're going to worry about tricking people to go long because they think it's going to break out above those relative equal highs. And it's not going to do that, folks. And some of you are saying, hey, but if you would have got it wrong, you wouldn't have shown this. Well, tell me how I'm doing what I'm doing live in front of 40,000 people, candle by candle, and it's turning on a dime and going right where I want it to go. That's probably luck, right? All right, so I'm looking at this little shaded area, or not shaded area here. I'm putting these shade of orange trend lines in here. And instead of putting another rectangle, I'm trying to keep the chart clean. So I'm watching how the bodies are being delivered. And we're trading right back into the butt end of that inversion fair value gap that's shaded in orange. Let me extend this over a little bit. All right, and just to prove to you that I'm not worried about this, see it's trading at consequent encroachment right there? That's the midpoint of that, the inversion fair value gap. Right there, let me darken it up. You can see it now. I'm going to add one more contract for the short and not worry about having any concern for that high being blown out and taking my stop loss. Watch how price is just meandering around inside of that inversion fair value gap. It's kissing the midpoint of it. That's consequent encroachment. And I'm watching to see, does it want to rip through that and touch the high of the inversion fair value gap? I'll sell the contract there, making it 16 contracts short. Or, okay, so that right there, that's indicating that it's telling me once to go lower. That's what that is right there. But I'm waiting for another opportunity to touch that inversion fair value gap once more. Notice how it did that rotation right at the midpoint. Now there's a small little volume imbalance towards the high of that inversion fair value gap. We might want to wick into that one more time. Traders that use rudimentary ideas like bull flags and bear flags, they're seeing a bull flag here. And 3 live streamers that you would probably know well off, they're looking for a break higher based on that premise. I do not see that. Now, they might deliver price back up into that inversion fair value gap and bait them into taking that buy and hoping it's going to break out to a higher high. But I think they're going to do a rug pull and down in that blue shaded area and maybe even lower. But I'm going to use the low hanging fruit objective of getting out at the high of that blue shaded area down here. All right, so we're back in consequent encroachment of the inversion fair value gap, and we're just in striking distance of that volume imbalance near the high. Okay, no, watch closely. That stop loss will not get hit. That right there is tricking traders into thinking that it's a bull flag and that validated their purchase. Oh, come on, TradingView, you're lagging. Okay, well, I just typed it and it's not reflecting on there, so they're glitching out here. Tighten your game up, TradingView. All right, well, basically just watch and see how the bodies lay inside that inversion fair value gap still. All they did was validated bull flag breakout. Retail wants to be long. They gave him the bait. Okay, well, now time for the market to show you what it really wants to do. And again, I'm not concerned about that stop loss. There, okay, they're just updated. You guys got to get that stuff fixed over there. All right, so I want to see it rotate down below those two orange trend lines. I want to see it trade down below it. And then once it does that, I want to see it stay below the half of it. And I'll show you what that means and looks like once it starts to move lower. One more kiss to the high of the inversion fair value gap. It's like a sweetheart taking a train. She's giving you a kiss goodbye. She's going down on the southbound train. Okay, Michael. Still looks good, don't it? None of you mentors out there that's trying to teach algorithmic stuff, you can't see this because it's not in your indicators. It's not in the things that you think you understood about price. It's all coded onto this. All the work is done now. Let me extend this out of the way here. Bull flag traders are looking for a rip higher. Breakout traders, longs. Right. What is that? Lime streak. Let me fix that here. Come on. All right, get out of here. Here. There we go. What the heck? Come on. There you go. Alrighty. So we're watching last few minutes before the market on close macro, which is the algorithmic script. It's not buying and selling pressure. It has nothing to do with those numbers you hear a certain website or a certain YouTube channel tell you. It's this many buy side and this many sell side. It absolutely has nothing to do with it. I'm going to prove it to you because all you have to do is go watch. And if you think about who I'm talking about, you go back and watch and listen to their live stream because they keep their recordings up. You'll hear that it sounds cool. It sounds technical. Wow, we have some data here. None of that matters to me because I already know what this is going to do. Just keep your eye on that blue rectangle down there because that's where it's going to draw to. I know some of you probably don't like these kind of videos. Just filter that part out, okay? But I'm just trying to prove to you that there's a difference between people that think they know what they're talking about because they want to sell courses and grab one more there. And then just want to catch it before it leaves that inversion fair value gap. So now we should start to see real nice heaviness in here. I want to see it trade down sharply into that first limit order of 3 contracts. But talking about something in hindsight or talking about theoretically and then being able to display it like this and like you're watching me do live in front of everybody in the Telegram channel, I don't edit anything and I never delete anything. So if I misspell something in the Telegram channel, it's going to stay there. See how heavy that looks? Now I want to see it touch the lower orange level right here. Let me elongate it there, and then drop hard right into that first blue shaded fair value gap, because that's an inefficiency and the algorithm already knows it's there. It's keying off of that information, and here's the midpoint. So everything needs to stay below that. But right now, if it's following script, it should just dive right into that right now. Right down in there. Just keep your eye on that. And basically, there you go. It's just like magic, isn't it? Magic Mike. That's going to start calling me around here now. All right, so now what it can do is it can rotate back up to the lower, but before dropping down to that low, I'd like to see it return back up into that lower shaded orange line. There's a volume imbalance between the candlestick that just closed and the one that broke below the lower orange line. So that's where my eye is, and it's the lower orange level line. It will act like an inversion fair value gap, okay, and drop down into that blue shaded area. So think of those two orange lines as another orange rectangle, but just to keep the chart clean and allowing me to show you details without cluttering all the chart up. I'm showing you the logic of what the perspective is I have. And let me add one more. I'm going to take contracts off below that minor sell side liquidity pool. I have a sneaky suspicion that they're probably going to pull some shenanigans here in the last few minutes. We've already seen enough to know that there's something else going on except for buying and selling pressure. All right. Okay, we might be we're going to go up into that volume imbalance. Worst case scenario, it tags the midpoint of the two orange lines that I drew. It's that drag this out here a little bit more. Get it set on 4 o'clock. And come on. There you go. So any retracement in here will fulfill the sell side imbalance, buy side inefficiency, and the volume imbalance. 2 candles back. And worst case scenario, it can trade back up to the midpoint that's highlighted at 21,411.75. In a perfect world, it could hit where we're at right now, use that as inversion and just tank it. But I think that they're going to want to try to send it up a little bit higher. But I'm certainly not worried about my stop loss because it's now covering costs. I'm not worried about that. I've taken first partial. Worst case scenario, if it rips up there and I'm wrong, you'll see it. But based on what it's doing here, it looks like it's trying to create a short-term swing low. So I would expect it to try to drive back up into that SIBI and maybe tap that volume imbalance. I certainly don't think it needs to go any higher than 21,411.75. So if it even gets close to that and fails and starts to rotate lower, that's a signature I'd like to see. I would try not to add any more annotations because it's already a lot busier than I like to have the chart look. I'll just add that one there. Faded paint here. All right, so I'm including the volume imbalance at the high of it. Now, because of the time it's spent in this area, I don't think it needs to go back to the consequent encroachment at 21,411.75. So the volume imbalance and maybe a wick touch into the lower orange line. There's your volume imbalance traded to. And there is the, let me take this line, extend it out a little bit more. So that's a perfect little kiss there. I like that. So now I want to see price respect the lower half and consequent correction of that pink SIBI. Okay. It should not go any higher than it is right now. If everything is running to script, the macro script that is going to deliver price down to that blue shaded area, because there's no buying and selling pressure causing this, folks. I know it sounds cool. It sounds like you're a trader when you use that lingo, but that's not what's going on. Right, so that little wick there was an immediate rebalance, but I think it's going to give up the ghost. The next candle or so should really dictate the narrative here. I don't want to see it trade outside of the high of that pink shaded box and the volume imbalance. So there's two PD arrays defending this on the upside now. It's the high of the volume imbalance and it's the high of that SIBI that's shaded pink. So I like this, but there's a little volume imbalance that this traded into. So it's normal for it to trade back up into the halfway point of that pink SIBI. Best if it just dropped right here, that'd be wonderful. I don't think that it needs to go back up to touch the orange lower line that it just traded to. Along it. Let's just a little bit here. It changes. So in my mind, I'm going to look at that as an inversion fair value gap. Now again, inversion fair value gaps, all of my PD arrays can be overlapped. Knowing the narrative where price is likely to go. See, I think this is going to trade back up into that and then drop lower. And what I mean by trading back up into it is that SIBI, sell sign of balance, buy sign of efficiency, that's in pink. Now, because we're in that old bullish fair value gap that I just changed the color, it can pump it up into that pink SIBI. But I don't believe we're going to go back up into these off in here. Okay, we're close to the high, so it might tap. I'm going to draw out the market on close macro box here. But I want you to really pay attention to what price is doing. It just touched the high of that SIBI and the volume imbalance. This down here. Okay, at 3:45 to 4 o'clock, that's our macro, market on close macro. Okay, and what that is it's a script where price will start ripping for liquidity. I've already given you where it's going to go. So we went right to the high of that SIBI and closed again one more time the volume imbalance. So now I want to see price really make an attempt or convince me, let's put it that way, that it wants to drive down to that minor sell side liquidity pool. So we've had price trade to the high of that SIBI, two PD arrays defending it. Well, technically three. It's the lower orange line, the volume imbalance, and the SIBI high end range. So now it should, with no problem at all, start ripping through that lower orange box like that. And in the perfect world, it should not come back on the next candle to even come back and touch it and just rip through it and trade down into that minor sell side liquidity pool and give me my first partial. Want to see speed and magnitude? That means the candles should start elongating, becoming large, black, stretched out candles. We want to see black limousines taking it downtown. You like that? I don't know where this stuff comes from. I don't have any idea where it comes from. Sounds cool though, doesn't it? This guy loves himself too much. All right, so 3:45. Let me put that where it needs to be at. There you go. And you'll notice that that starts to rip at the top of that sell sign imbalance, buy sign inefficiency. Now I know some of you that are watching this for the first time, you're thinking this is all cherry picked. But am I cherry picking it in front of 40,000 people now live in Telegram? Oh, it's delicious, isn't it? Okay, we got some limousines coming downtown now. Let's go. Come on. Give me some stretch limousines. All right. Oh, you see that? It just tapped it. Okay. We're going to see another one open in this. Oh, there it is. It gave me it. So now I want to see the next candle or series of candles really just dive down here. No return back up into that lower inversion fair value. You got this shaded orange. So the next candle, when it opens, it should just dive down. I'm going to roll my stop down here. So it's definitely not likely to go up that level. Okay, 4 seconds to the next candlestick open, and it should just dive down into that. And dump it. Here she comes. Look at that blue shaded area as the best nightclub. And now all these black limousines are showing up at the front door. And inside one of them, yours truly. Come on, Dad. There you go. Drop it. There you go. So, anyway, this was just a display of who knows what. And again, these are some of the things that I'm never going to teach you. You can clearly see why, because it's extremely advantageous. And here is what you can see. Right at the beginning of that macro at 345, delivered. Perfect. Just like a multiplication table. Hope you found it insightful. Hope it encouraged you. And don't be mad at me in the comments. I'm just showing you who's who. Until talk to you next time. Be safe.